Let's take a look at what's going on the trading floor in Chicago and visit with Scott Gecas. He's with Walsh Trading. He's right there at the edge of the floor. So what are traders talking about behind you today there?
Yeah, I mean, it's, and from a technical standpoint, all the charts are completely broken. So you have beans, we have stiff competition from South America. China continues to buy beans from Brazil, especially with the corn. Brazil exports in corn are at record levels. So until any of that changes, the trade war talks, the tariffs, at some point get a little bit of a relief. You expect these charts to continue to be in that downward pattern. You know, for corn, with that 360 level was a big level. We broke that, traded all the way down to 58 with a big spike in volume. Volatility popped a little bit. But the thing I want to mention that really sparks my interest is the option volume is dismal. Very little option volume. The open interest is pretty small across the board. Usually you're seeing open interest on some of these options anywhere between the 10 to 15,000 ratio. For corn, our highest level open interest is around 11. For soybeans, the highest level of open interest is around 4,800 on the 830 puts. That's very light. So until something changes, volume needs to pick up. We're not really seeing too much volume or too much open interest changing. So we're just pretty much in a wait and see period. We have to wait for some type of news to break out, some type of headline to be able to react on.
I was looking at the I-80 corridor for the corn harvest, or excuse me, the corn conditions. We like to track what's going on between Nebraska and Ohio. And in the crop conditions this past week, we actually picked up 3 percentage points in the good to excellent category in Nebraska. Meanwhile, in Iowa, we went down 3 points to 62% good to excellent. Illinois went down 3 points as well to 46%. Indiana went up 1 to 33. So they're still bringing up the rear there. And we have Ohio up 4 points last week, but still only 34% of the Ohio corn crop rated good to excellent right now, only a third of it. We're going to come back here in a moment, Scott, and we'll take a look at what's going on in our livestock trade as well. Choppy markets there, too, this week, and we'll take a closer look in just a moment. We're talking during the break there about potential impact here on the hog industry. You say the weather could be playing a big role in that this week.
Yeah, if the hurricane comes through and affects that Smithfield plant in North Carolina, that could definitely be something that the traders are going to be watching for a bullish catalyst. The whole overall story for hogs is definitely a bullish catalyst. We just need the data to come in to support that bullish tone. You know, we need the exports to show up. China is definitely in demand for U.S. pork, whether or not they actually buy it from U.S. or if they're buying it from outside countries. If we see some exports from the outside countries, traders here in the States are definitely looking at that as a bullish catalyst. We should see a bump up in hog prices just based on that. So we have to just wait and see, again, for all the headlines. Everything is dictated by the headlines. As far as the cattle goes, you know, the market's still digesting that slaughter plant being shut down. So far, the slaughter is being pretty much picked up. It was off a little bit, but year on year, it's up over versus last year. So we have to wait and see if that's going to continue to be there. Overall, there are short-term demand concerns just because of the economy waffling back and forth, whether or not, you know, the sky's going to fall, if this recession's actually going to happen, or is it going to continue moving forward like the stocks are today.
Well, good points. And the Dow is up 172 points today, and yet the cattle are struggling. So there's a little bit of a divergence there. How strong do you think the feeder market is then for the time being, just quickly here?
For the time being, I think, we got to follow the trend. So with it being a little bit higher, I think you got to stay a little bit bullish until that trend reverses.
Nice. All right. Well, thank you for talking with us. Scott Gecas, he's with Walsh Trading right there, and he's right there in Chicago.
Okay.
All right.